it over to you to kind of overview the program.
Great, thank you, Ian. Just a couple things on Zoom protocol. I think a lot of you probably feel like you've lived your last 2 weeks on Zoom, which I do. So it's a great tool. I've got everyone muted now, just so there isn't a lot of ambient noise that can be really distracting, especially right now we have 57 people on this conference call. So if you could just adhere to that, there's going to be a time later in the presentation where there'll be time for Q&A and you can individually go unmute your line. If you hover over your screen, you'll see in the bottom left is where there's a little microphone. Yours will have mute on it. And there's also, if you want to, if you happen to have bandwidth issues, if you're coming from your home or something, you can stop the video and just do the audio. And sometimes that helps too. Just a little just tidbit that if you're having trouble with it, or if it's starting to break up, it's probably on your side, not on the main side. And then also, if you hover over each picture or of the people there, you'll see in the upper right corner 3 little dots. You can click on that and you have the ability to chat with those folks individually, or you can send a chat to the whole group. And so I'd like for, as you have questions through that, even though there'll be Q&A at the end, if there's something that strikes you, just go ahead and type it in the chat, and we'll do the best we can within our hour to read through those at the end. Does that sound good to everybody? Can everyone give me a thumbs up? Great, thanks. Just so you know, I am recording this presentation, so it'll be available at a later time, so you can listen to it in its entirety. Paula Milstead, our marketing director, sort of helped me figure out how to record it. I'm hoping I'm doing it right. It's recording now, so unless I botch the technology, I think we'll be good to go on that. Susan, I don't know if you wanted to say anything, or John Muller should be on from Sonabank. You know, I think this is very much meant to be a collective bank presentation for all our community banks in the area supporting our community. So Susan, I'll turn it over to you real fast.
Well, just real quick, this is as you said, we're at the beginning stages of trying to figure out all the details of this, but please know that your local community banks are looking at all the webinars. We're working hard to figure out how to execute this because we want our community to be a beneficiary of it and be strong through this. So thanks, Jeff, for leading it. And if you need anything, all your community banks are here for you.
That's great. And John, I don't know if you're on the line by chance. Did you?
I am. Do you hear me?
Sure, I can. Yep.
Okay. Well, yeah, I did what Susan and you have been saying, and we're all in this together, and we're here for our clients.
Good. Thank you, John. And just so everyone knows, from Atlantic Union's perspective, I've been on meetings with their CEO through the better part of this week, and they're all in on all this too. So it's sort of an all hands on deck effort for all banks to execute this, and it's going to take a lot of community involvement too. A couple things before I get started. I picked my coffee mug this morning. It's my NASA mug that said, "I need my space." So I think that's very fitting in this. And then I also have a friend with me in the room with me. It is my full-size cutout given to me by marketing department, and that Jeff does not need to worry about getting COVID. He is immune, so he's good to go. Okay, let me go ahead and start. Let me frame the situation a little bit. Most of y'all have been familiar with it. Some have totally tuned it out because they're so sick of hearing it, and I understand both positions. There's a $2.2 trillion bill that was passed, not last night, the night before. Right now, it's only passed the Senate. The House is supposed to be taking up that bill at 9 o'clock this morning. It's fully anticipated they'll pass it without changes, but it ain't over till it's over. And there's a commitment from the White House as soon as the House passes that bill to sign it. So my gut would be that this will be law by this afternoon. So what we're talking here is of that $2.2 trillion bill, this is only $349 billion of it. This is what it's called the Paycheck Protection Program. This is just a portion of that $2.2 trillion bill, so everyone knows that. There's another $500 billion going to big industries like airlines and infrastructure things, and everyone knows about the checks that'll be coming to individuals. That these are all components of the bill, but we're just talking about the SBA portion of trying to help small businesses today, just so everyone knows. Many of us sat through a webinar yesterday to try to get as much information as we could on this out of DC, as with the senior officials at the SBA. All I can say about it is it's still moving. It's rapidly changing. The SBA, as of right now, has not issued guidance on how to administer this program. They've given some indications, and they say we're working on it. But you'll see as I get through a program, when we walked away yesterday, we had as many questions as we did answers. It helped clarify that, but it triggered a lot of other questions. I'm sure you all will be the same today after this presentation. Just get those questions to us, and we will find an answer for you. When I say we, I mean anyone at any of the banks. We have the channels to find those answers for you. So don't be frustrated into the call, even though we might appear a little frustrated ourselves. It's unfolding pretty rapidly, and we're just doing the best we can to do that. Before I get into the presentation too, I think it's also important for y'all to know. Let me mute all. It's also important to know that each of the banks have their own form of debt reliefs going on to their existing customers with the existing credit. So explore that opportunity too, because we recognize that we're all in this together. So existing loans with existing customers, we are trying to move into that breach, I guess is the best way to put it, and make sure that we can provide whatever support we can as we go through, hopefully, a relatively temporary trough. So over and above the SBA program we're talking today, banks have their own measures of trying to provide a little debt relief so people can get through this and we can pop out the other end with still viable businesses and continue to serve our community. So just so you know that. And then one plug before we get into it too, I think if there's not a better crisis is the best word, I guess, to show the importance of shopping local, it's this. So whatever you can do to help support the local businesses of which you are there, even if it's somewhat contrived or fabricated, please try to do it, because every little bit helps in this very difficult time. I'm going to share my screen now, so hopefully everyone can see what I see. If y'all could give me a thumbs up, do you see the CARES Act Paycheck Protection Program? Do you have a thumbs up on that? Good. Okay, I'm going to go through this. I'm going to try to keep the pace relatively quick on this, just so everyone can keep this, so we can keep it going. And I know that, like I said, there'll be more questions than the answers. John O'Shaughnessy is also on the line too. He's probably better versed in this than I am, putting some pressure on you there, John. So if there's anything, any of y'all that know as much as I do about this, feel that needs to be emphasized, just unmute your mics and interject those comments. That would be very helpful to me. So let's get into it. Hold on. Okay, where are we now? I already mentioned that the bill just passed the Senate. House is supposed to take it up at 9 o'clock this morning. Hopefully by the end of the day, we'll have law signed by the president. I will say on the presentation yesterday with the senior SBA officials, I just put a few quotes in here. Almost every answer they gave was, "It is my understanding that," or "We're still working through this," or "Well, it's a moving target." So the level of how vague it is up there is coming straight from the top, and they're doing their best to sort of solidify and coalesce things so we have better direction downstream. But right now, we're only as good as what they're providing us, just so that everyone knows that. So there's going to be patience that's going to be needed from everyone as we proceed through this. Let me give you an overview. It's the PPP, as you saw on the cover slide, is the Paycheck Protection Program. It's a $349 billion program. And to put it in perspective, it's being administered through the Small Business Administration. That is the vehicle by which the federal government is going to deploy it out. And the SBA in turn is going to use banks as their agents or conduits to get the money out across the country. So we are very much in the chain of command there. SBA typically, on some other programs, you can go SBA direct. For this program, they're not administering it that way. It is the conduit to this is going to be through your local bank, just to be clear. To give an idea of the scale of this, the SBA typically does about $20 billion of loans a year. So they are self-professed trying to deploy $349 billion in 1 or 2 months. So I haven't got my head around that from the scale and the throughput that's going to be required for that. But just to let you know, those are facts. That's what we're doing. So they're hoping to roll it out within 30 days because they see it as stimulus that needs to hit ASAP before businesses let a lot of employees go. And I'll get to the details later and see how they hope to help that. But just know that it is a very, very, very big program that is trying to be pushed out right now. And there's just a lot of different information flowing around. As I mentioned, it's going to be administered through the SBA or through SBA approved lenders. Every bank in our community here is an SBA approved lender. So we're all approved. All 4 of us in our market are eligible to be able to help deploy this through our community. All businesses are included, including sole proprietorships. So it can be a business of one. You know, if you file a tax return as a sole proprietor, you run a business, you are engaged in this too. The businesses, I don't think we hit the threshold here, is up to 500 employees or less is the ceiling on that, and 1 is the ceiling on the bottom. Of interesting note, included in the bill too, which matters to us around here particularly, is typically nonprofits are not eligible for SBA lending. They are for this program. So nonprofits, 501c3s, are eligible for this program. So any of you on the line that are not for profits, make note there. The program is open for requests for financing through June 30th. So we've got, in technically 90 days, a little bit more than 90 days to do that. These loans to the banks are 100% guaranteed by the SBA. SBAs do not guarantee loans typically 100%. They are for these. So I know we're wrestling. I know I talked with Susan yesterday. She's wrestling, and John is too. We're, you know, they say don't worry about it. It's 100% guarantee. We're sort of trying to evaluate what sort of risk we might have. We want to be as flexible as possible to help serve the SBA needs, but there is sort of a residual concern that all this goodwill of getting this money out might become a distant memory a couple years from now. So some of us had that from 2008, so we remember probably a little too clearly what that was like. The loan specifics, this is really interesting. Okay, that each business, however small or big, is eligible for a loan amount that's the lesser of $10 million. I don't think anyone's going to hit that on this call here today, or 2.5 times your average monthly payroll. So take your last year's payroll. There's a look back to last spring. Take 12 months worth of payroll, divide it by 12, and multiply it by 2.5. So the intent is 2.5 months worth of payroll is the amount of loan that you are eligible for. There's no collateral requirements on these loans, which is very unlike the SBA, and there are no personal guarantees on these loans, which is very unlike the SBA. So there's a significant loosening of the credit standards of the SBA to try to get this money out. There are no fees associated with it either. So it is money to you based on application. The The rates I have here, I know that looks a little confusing. Yesterday on the call, the SBA said they were, if the loan was over 7 years, it was prime plus 2.75, or if it's under 7 years, it's prime plus 2.25. Everything I read that came out last night and this morning has a 4% cap on that. So I think for the sake of argument, that loan will never be more than 4% for the life of that loan. The maximum term is 10 years. So the term of the loan would be 10 years. And I know there's probably more discussion on this, and we're finding out. They said yesterday the proceeds can be used for any SBA 7A, that's the name of the program that they're utilizing, permissible activities. We will find that out for you, and we'll get that out to you. I think it's pretty straightforward stuff. And with the social distancing and all that stuff, electronic signatures, this can all be done electronically. It does not entail you having to come into your bank to apply or even to get the funding. It can all be executed online, just so everyone's aware of that. The big deal on this one, why it's so different than any other SBA loan, is if the borrower can document that the proceeds for that loan were used for payroll, and it's my understanding payroll includes payroll, tips, and even benefits. We'll get clarification on that. So payroll, mortgage interest, or rent, or utilities, that amount for an 8-week period is totally forgiven by the SBA. So the way to think of it is like a government grant that is not payable. That portion of your loan goes away if you can document is used for any of those 3 purposes. It's forgiven by the SBA. And the intent of it, obviously, is to keep people employed. So if you say, I'm getting ready to lay some people off, I have no revenue, and you get part of your loan for this, and it's to support for a 2-month period, essentially 8 weeks, the payroll of those folks, keep the lights on, the utilities and all that stuff, and whatever your rent might be, or mortgage interest, that's going to be fully covered by this loan and not repayable by you. So as you can imagine, this is going to be, I think there's a reason they have 349 billion in this. That can be a really big number. And that obviously, so the way to think of that portion of it is to think of it like a grant, like a government grant. And it's a freebie. It truly is a freebie. I know there are a lot of devils in the details that we don't know yet, but that's what we know. If, just use real numbers, say you take out a loan for 100,000, and for that 8-week period, you can only document 75 of it is related to one of those 3 activities. The 25 is the non-forgiven amount, and that can be termed up to 10 years. So the way to think of that is you're taking on new debt there. That needs to be paid back by you and your business if you do it. So I think there's going to be a lot of art into, forget what the 2.5 times monthly payroll is. That could be that's a retrospective number based on your prior payroll. If, for instance, you've reduced your payroll already and apply for that higher amount based on historical payroll, and then your pro forma payroll going forward is less, that's the number you need to pay attention to. Just don't automatically go for the full amount, and do a projection looking forward to 8 weeks to see what amount you're going to be able to justify that the government's going to let you off the hook for. So I do have a concern people going willy-nilly into this and laying additional debt on their businesses at a time when really they don't need additional debt. So I think that the art of this will be taking care of the amount that the government will reimburse you for, and making sure that the long-term debt portion is minimized to the extent possible. John O., I don't know if you have any thoughts on that or anything? You're as well versed as I am on this. If you unmute your phone and chime in, that would be great. We are
No,
so
I just think, you know, the burden is on the borrower to be able to provide the documentation to support, you know, these acceptable uses of these funds that are not going to be forgiven. So that's going to be the tricky part, I think.
Thank you. And then as far as the reimbursable expenses, when you think about it, it's not your full mortgage payment because that would be principal and interest. The government is not in the business of paying down your debt. They're just paying your cost to carry, so your interest. So you need to break out your mortgage payment, whatever it is, and call out only the interest portions because only the interest portion of that mortgage will be reimbursable or forgiven. Things we're not sure about we're not sure about how the forgiveness is done. They haven't worked that out yet. We don't know what time frame it's forgiven on. So more to follow as they start to put guidelines out and hammer a little structure around this program. And like I already said, this is the unforgiven amount is long-term debt. So just be careful as you apply for this that you don't end up biting off more than you can chew, I guess is the best way to put it. On how to apply, this is we are working on, the SBA will be getting out streamlined forms. They have 2 existing application forms that on the phone call yesterday, they're going to reduce those or streamline those to make that very easy to fill out. So if any of you have ever done an SBA loan before, you would know that it is a huge paperwork drill. I mean, it is, you know, nauseatingly so. They assure the banking community that this is not going to be like that. You know, I've heard a one-pager. I don't think that's possible, but I think it's going to be a greatly reduced, streamlined application process. Their commitment from a turnaround, so they said on the phone, is they will give the bank or the lender, which would be the bank in this case, a 24 to 48 turnaround with their approval to extend that loan. This is not going to go into some great government black hole. They say it's going to be a quick turnaround, and they are highly relying on, which makes me nervous, they're highly relying on the local banks for vetting this. And like I said, there are no lending criteria that we have from them yet. So those guidelines will still be determined and what we need to get from you. So more to follow on that. I would guess if this bill's going into law by this afternoon, people will be queuing up, if not this afternoon, Monday. So I would hope there'd be some rough guidelines that we will have in our hands by Monday, but I don't know. So we'll find out. As I mentioned before, your bank is the conduit for these applications. They mentioned that we will have to have wide scale lender training. You know, they haven't done that yet. And so the people lending out this money do not know what's going on. So it's a little, the head of the ABA referred it when I was talking to him the other day, it's sort of like the Wild Wild West. It'll be a little bit like the Wild Wild West for a while.
Yeah, Jeff,
yeah, go ahead.
Something else worth noting, I think, is that, you know, typically the SBA approves these loans. We submit a package, the SBA approves it. Under this scenario, the banks are actually approving the loans. You know, they're trusting the banks to approve the loans to expedite the process, which is totally uncharted territory,
Yeah.
like the whole program.
Yeah, and you know, we've had some discussions in the trust but verify mode. Our concern is their verification after all the dust settles might be a little more stringent than they're telling us right now. So just know that's the environment, sort of the really gray environment we're working in right now.
And that's where, as a bank, we are trying to get up to speed as fast as possible because, like Jeff said, we, as bankers, we do have memories that go back to 2008 and 2009 and the SBA ARC program and the proof was in the pudding as far as how much the SBA really stood behind banks. We are going to do everything we can to participate in this program to help our communities, but we are going to have to weed through those requirements and make sure we're doing everything the right way, because it is going to come back on the banks. And even though we're underwriting and approving the loan, I've never even gotten a loan number from the SBA. Their process, as Jeff said, they're going to be trying to funnel a lot of money through a system that typically only does 20 billion of loans a year, and they're doing a lot. And so it'll be interesting to see how fast, as the slide says, time will tell how fast banks actually get the loan numbers, which will actually be what allows us to disperse funds.
Thank you, Susan.
Yeah. Could I ask a question?
Yeah, who is this? I can't see.
Oh, it's Elizabeth down at Bayside.
Hey, Elizabeth.
So I went on and looked at SBA stuff and even called SBA about it, not wanting to get left behind. But those cumbersome forms for SBA right now, we can just hold off on those, not do anything with that stuff right now and work through the bank.
Yeah, correct. Thank you. What's floating around that's getting sort of conflated with each other is in one of the bills passed about 3 weeks ago, there's what's called an EIDL loan, an EIDL.
Right, yeah.
Loan. That is separate from this. And as far as I know, we're still trying to find out, the EIDL loan has no element of debt forgiveness to it.
Okay.
So that's a different animal altogether. And to put it in perspective, we got 349 billion in this bucket for this program here. The total EIDL bucket is 10 billion.
Okay, because
So
the forms on the
is
SBA site are,
Pardon me?
the forms on the SBA site are extremely cumbersome.
Yeah, stop. Don't do that. Wait
Good.
until the streamlined forms get out, because that would be applying for the wrong program altogether.
Okay, perfect. Thank you.
Thank you. And banks will be submitting these electronically, and as I mentioned, 24 to 48 hours turnaround time is what they committed to. So we will see on that one. On the suggestions I would have, best I can, and this is Jeff and John speaking, and just trying to hammer out how we proceed with this. I think probably the first thing you need to do is talk to your existing bank who already has a feeling for you and your business. I think that's really important. One of the things they mentioned on the call, an acronym in our banking world is called KYC, is Know Your Customer. They are leveraging a lot of this trust on banks' KYC policies of knowing their customer and what happens with that. So I would that since we're the conduit, I would go to your existing bank and start the dialogue there. And I think each of the banks has committed to keep everyone as fully informed as they possibly can. I would go ahead and start gathering your information to apply, and not knowing what the application is going to look like. I would at least start going through the numbers of retrospectively, what is the maximum amount you could apply for? What is 2.5 times your monthly payroll? At least determine what that number is. And then I think it would make sense for you, since some of you, I would imagine, had a larger payroll historically than you do going forward, just trying to model out what your payroll, rent, mortgage interest, and utilities will be for an 8-week period looking forward. So in other words, try to quantify to the best you can what the level of forgiveness would be, to make sure if your retrospective number says 150 and your prospective number says 75, you don't end up with a 75 unforgiven portion that is permanent debt for you going forward. I think it's also, if you go through just the math of it, the 2.5 times your payroll is how it's calculating the loan amount, but there are 3 different areas: payroll, mortgage interest, rent, and utilities that can eat up that loan. So, at first you're indexing 2.5 months worth prospectively to live off of, but you have more expenses eaten to that number than 2.5 months. So it won't, the best way to put it is you've got a lot more draws at it on that number than the way the number's being calculated. I hope that made sense. So just be aware of that, but start gathering your information. So when we hit the ground running and we have guidelines and all that, which I don't know, I would guess by Monday we have a lot better sense of what's going on than we do right now. It'll be law by then actually too. Third bullet point I'd say is just evaluate your financial situation with and without this loan. You know, the forgiveness part, I would guess for most of you might be a slam dunk. You know, that's for lack of a better word, that's a federal government gift for you to try to keep your people employed and your doors open and your lights on is what the intent of this program is to do. But make sure you analyze your financial situation if you go forward. And then last thing, I know you've heard me say it all day long, we don't have all the answers, but we know how to find them out. I mean, we have resources to go find those out, and we will, with all good faith, effort, and due diligence, try to get as much information out as we can to everyone going forward. It's I guess the way to put it is a big, massive government program that's trying to be deployed incredibly quickly and without a lot of guardrails on it right now. So you could argue that's a recipe for disaster. You could argue that it's needed stimulus to get in communities as soon as possible. And there's merit to both of those arguments, I would say. So we just got to proceed with caution to make sure we do it properly and do it the right way. So John, Susan, before we open it up for Q&A, I would if anything y'all want to add, John Muller, John O'Shaughnessy, Susan, Ann.
No, I think you covered it well, Jeff.
Okay. I'll say as we're closing up, I will send a written copy summary of the bill to Ann through the chamber so she can distribute it to you all there. And I'll also send a copy of this presentation if anyone cares to see that, they can get that through the chamber. So
I'll send it out. I'll send it out. And we also have information on our website. But just so I'm clear, people call me, I'm directing them to my local bankers or their local bankers so they can get, that's the first step.
Thank you. Yeah,
Okay.
You're right. So if you could just distribute the summary, and if everyone can familiarize themselves with that summary before they call the bank, that'll expedite the whole thing when they talk with the bank, I would guess.
Perfect. So I will send out the summary, and so everyone has that in their hands. We know where to start.
Perfect.
Okay.
So
thanks.
now
Can I add something? This is Chad.
Who's this?
This is Chad Thomas.
Hey, go ahead, Chad.
Yeah, just with, I mean, we live in this, it's an unprecedented historic time. I mean, this bill's coming so fast. Just with my experience with, SBA and small, all these government loans, I think it's really important that the businesses know that, to be cautiously optimistic about it. And that, that like you've been just nailing on the head, the devil's in the details. If now's the time to get your house in order, because you're going to have to document everything. While it is a gift, you will be, I think what we'll see is like an unprecedented release of funds. To actually, qualify for those funds is going to be, the responsibility is on the business owner and the bank. And so now's the time to get, your house in order, get that documentation, because it's all about documentation. So it reminds me of like the federal loan, service loan forgiveness program for all the government employees back in 2008. Government was trying to get more people in the public sector. They said, hey, if you go to school, we'll forgive all your loans. And now a lot of us millennials are figuring out that, hey, that gift wasn't so free. There's a low success rate, 5% success rate right now. So I think just as a business owner, this is a very historic time, but just make sure your house is in order, because when you want for that loan to be forgiven, you're going to want all that documentation.
I couldn't agree with you more, Chad. It's, everyone be cautious and as you, just like you would for your tax return, if you expected it to be audited, approach it sort of the same way. I think it's probably a good standard. Are there any other, if you're finished, if like we told you earlier, bottom left, if you want to unmute, just unmute, ask a question, and we'll take it from there.
Hey, Jeff.
Yep.
Ken Bransford.
Hey, Ken, how are you doing?
All right, buddy.
Aren't you glad you're not in banking anymore?
Absolutely. Absolutely. Earlier you said nonprofits were eligible. I did listen to the SBA presentation yesterday, and
Yep.
I didn't come out with that feeling that they were there, and they talked about the NAS code and calculation. Yes, it was eligible. They thought for 500 employees or more. There's a lot of nonprofits around here that won't even come close to that.
Yeah, I think specifically, Ken, I have from the summary I have that I got this morning, the nonprofits are 501c3 and 501c19 veteran organizations. Those are the two nonprofits that qualify. If you're other than one of those two, you would not qualify.
Okay, thank you, Jeff.
Yep. Any other questions? I think, Dan, that might have answered, you asked about 501c7s. I think that might have answered your question too.
It did, Jeff. Thanks a lot. Yeah.
I think that one thing to be said, based on the training that we went to or the seminar we went to yesterday, was that because the SBA is not used to lending to nonprofits, I think the guidance related to the nonprofits and how to handle that piece might be the lagging piece of it, because the forms aren't meant for nonprofits. And so that's the one piece that the person who kind of was, seemed like she was over top of trying to make it actually fit into the system. She seemed a little bit more reluctant in all of her answers related to nonprofits. So I think that's going to be one of those things that we really have to be careful of when we look at the guidelines, so that we can give you good advice as far as how to actually apply from that perspective.
Good point. Thank you, Susan. There's a chat out there that says, as a self-employed person, I move cash from my business to my personal account. What documentation would I need to show the amount I pay myself? As a work from home business, can I include my mortgage for the 8 weeks or the portion that I claim on my taxes? I would say, I don't know the answer to that. It would clearly not be your full mortgage payment. It'd be like the home office deduction that you claim on your tax return, interest only is what I would say to that. But I would definitely check with your CPA on that.
I have a question.
Sure.
Or not really a question, but so we have about 70 people on this call. The chamber has how many, Ann? 265 members, something like that?
Almost nearly 300, almost 289 or something like that.
Okay, so what can we do as members and volunteers to help get this word out with very specific information? Because we don't want to characterize it inaccurately, and get business owners to act on this. I'm wondering what we could do to help get that information out.
Susan, I guess my quick answer to that would be I think the summary that I'll send to Ann would be step one, if that could be distributed through whatever mass email you all have. And then I'll also, once I figure it out, I'll provide the link to the recording of this so that people can listen to it at their own time. But I do think it's incumbent upon the chamber to make sure all the businesses are aware of this, because this is a total life ring that many people are going to need. Good question.
Thank you.
And I'm open to suggestions on how I can disseminate the information. I have no problem going door to door, giving people packets of information if we need to, so we can get the information out. Lots of people are calling, so
Yeah.
I more information I have, the better, and the more correct information I have, the better.
Any other questions?
Question.
Yes.
Hi, Jeff. This is Pam at Country Cottage.
Hey, Pam, how are you doing?
Good. They're saying sole proprietorships. We are a C Corp, but I've got 5 employees at the most. Do we still qualify for that?
Oh, yeah. I guess the reason I've emphasized the sole proprietorship is because typically that doesn't fall in the auspices of the SBA. Yeah, definitely a C Corp, S Corp,
Okay.
LLP, LLC, all of those would clearly qualify. This just adds on sole proprietorships too.
Okay, the other question, you were saying as far as payroll, we take the last 12 months, but you were also talking about, we're going to be adjusting our payroll down as business slows down. Do we have to keep, in order to qualify for this loan, do we have to keep a certain amount of payroll? Do we have to, what's the qualifications there?
Yeah, I guess the way to get your head around it is possibly one of them is the amount you can apply for. That's the
Right.
maximum amount you can apply for. What you need to figure out is looking forward prospectively, what amount of that are you going to use on payroll, mortgage interest, rent, and utilities to be forgiven? So it's really two different things. So I think,
But there's,
go ahead.
so there's not like a regulated, if you've got, because I've got one full-time employee. I mean, do we have, plus I've got a couple of teenagers. So do we have to keep, do we have, she needs to stay full-time in order to qualify for this loan, or how does that all work?
The short answer is I don't know the answer to that. We don't have
Okay.
guidelines on that yet. But my presumption would be whatever dollars that you expend that are payroll related would be eligible for the forgiveness in whatever form that takes.
Okay.
So that would be my guess, but that's probably worth us finding out exactly what is meant by that. That's a good question.
All right. Thank you.
Shirley.
And those guidelines from the SBA, that's what we're kind of waiting for, because we also want to make sure that it qualifies as true payroll. Is it going to be just someone who is a W-2 employee? Because I know a lot of businesses do things like draws and guaranteed payments and things like that. It appears that this is going to be very much wage related, W-2 payroll related. So we're going to have, I think that those are the kind of specifics that, like Jeff said, it's going to be Monday, hopefully, that we get some more specific guidelines. The bill is very specific on how to calculate your average from the perspective of 12 months of payroll. But as far as what the definition of payroll is, that's what we're waiting on.
And this might apply to, especially around here, some of you, there is a provision in it that I'm not familiar with. They mentioned yesterday that if you have a seasonal business, it doesn't just have to be your annual payroll divided by 12 times 2.5. You have provision for taking a seasonal portion, but that's really drilled down specific. So I don't know the answer to that yet. They just mentioned it yesterday. One other thing I did not include that I probably should mention is the really 5 specific things for businesses that need to qualify for this PPP program. One of them is that the borrower can make a good faith certification. You, the borrower, would say that you have experienced some business related injury. Being able to say that word helps too, to COVID-19. So that's 1. 2 is the borrower meets the applicable SBA size standards for numbers of employees and independents. I'm finding out what independence is. The number of employees for the sake of this is 500 or less, which I think we all do. The borrower was in business February 15th, 2020. So it isn't a retrospective thing that you were out of business on February 15th, or if you started a business since then, those two would not qualify. That the borrower will use the funds to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. That gets the forgiveness. That's what they want the money to be used for. And then 5, that the employer is not double dipping. In other words, that you're not seeking the same type of PPP loan from one bank and then going to another bank and trying to do the exact same thing. So those are the 5 requirements or qualifications to be part of this PPP program. Sort of like drinking from a fire hose a little bit, isn't it? Any other questions? I guess a couple things I will close with before we sign off then is just communicate with your bank. We'd heard that we were a portion of this program and we're going to be, involved in it. In the call yesterday, we find out that we are the conduit. So that was news to us as of yesterday, that we are not only a participant, we are the participants in the deployment of these funds. So that was sort of thrust upon us yesterday. So communicate with your bank through this. Obviously, it's unique times that we're getting through. We have a strong community. I do think in some form or fashion, as much as I'll show my political stripes here, I'm not a big government intervention person, but I think we're at the stage where we are now, as I think this is duly needed, given just the extraordinary nature of where we are. So I think I would hate for us to suffer and not take advantage of a program just because of ignorance on our part. That doesn't make any sense. We have an investment advisor that I was listening to a webinar, and his quote was, "You don't want to be simple in a world that requires you to be complicated." As much as you hate to say it, we're in a world now that requires us to be somewhat complicated. And so we have to sort of dig in and do what we got to do and not just skip over the surface of the water, but sort of make sure we grind down to do this. We have a strong community if we take advantage of this. And you also take advantage of the other debt forgiveness things, or not forgiveness, but deferrals that banks are taking on their own. We have clarifications in this bill for how we have to treat certain loans that gives us a little more latitude than we had before. So the Congress has helped us a little bit with that, but it's still our risk. But we'll make through all this together if we all pull together and make sure we do what we need to do during a very difficult time, and we'll pop out the other end of it. It'll be a tough journey in the meantime, I think. Ann, do you want to close with anything?
Well, yeah, I just wanted to say how grateful I am that we have a community of bankers that know everyone personally, and that it's super easy for me to direct everyone to their bankers because we know this community is going to rally together. So however the chamber can help, we want to help. However, whatever the community needs, we're going to get through this. And I feel that we have a very strong community, and I'm proud to be part of it. I'm proud to know all you guys and know that I can pick up the phone and call anybody and get people the answers they need. So thank you.
And thank goodness we have such a strong chamber. Thank you for all you do.
Thank you.
Okay, if there's nothing else, we'll sign off. Everyone wash your hands.
Don't touch your face.
Don't do this.
Thanks, Jeff. Thanks, Susan. Thanks, John.
Bye-bye.
Bye.
See ya.